focus on oil. Our guest is Hussein Allidina, head of commodities at TD Asset Management. Hussein, it's great to see you. Thanks very much for coming on the show.
Thanks for having me back.
You don't see a big rally in oil prices anytime soon. You see it stuck maybe $70 plus, but you do say the world situation is tight, supply is tight.
So I would argue that the disconnect between the micro, the fundamentals, the supply and demand, and what you're seeing in price, the WTI price, the Brent price, is probably more disjointed than I've seen at any point in the last decade. You're absolutely right. Inventories are tight in the first couple of months of this year. Globally, inventories have drawn. Energy Aspects pegs it at around 60 million barrels. Typically, inventories draw a bit in the first part of the year. Today, refinery margins are trading $20, $25 wide. Refineries are paying an $8 premium to get oil today versus waiting a year to get it. That's not a sign of a tight market, but I think we're worried about, or consensus is very worried about the macro, right? What is going to happen to growth? We see what equities have done for the better part of this year. Equities are anticipatory. Commodities are reflecting the here and now. And the here and now is still quite constructive.
Actually, I don't want to mischaracterize what you say. Your base case is that oil should average $70 US plus.
Yes.
But do you see much potential for a rally given this tight global market?
There is. So earlier on the show, you were talking about Iran, Venezuela. There's a lot of production at risk, and that might be something that gets the market more focused on how tight fundamentals are. But if we continue to struggle with this sort of idea of drill, baby, drill, production's going to grow. And again, for the better part of a year, folks have looked at the forward balance and said that we're in surplus and inventories are going to build. We haven't seen inventories build the way that I'd argue the bearish consensus has called for.
So world consumption has held up, generally speaking?
Demand is going to grow. Globally, demand today is about 104 million barrels a day, and it's going to continue to increase, and it continues to increase, maybe not by 1.5 million barrels a day, but the IEA's got demand at 1 million barrels a day. And which way did they revise it the last time they came out? Higher. Consistently revising demand up because lower prices encourage you and I to consume more, and lower prices discourage supply. So what's happened to U.S. shale production growth estimates since the last time I was on the show? They've decreased.
And the CEOs, sorry to interrupt, the CEOs in the shale patch say we are going to start plateauing before too long.
Look, and I think absolutely the sort of uncertainty around tariffs, which we've been talking a lot about recently, adds to that unwillingness to invest. But like copper you talked about earlier, this stuff takes a long time to bring to market. We can't decide tomorrow that we want to bring oil to market because it won't be here tomorrow. We have to be thinking about the future, and the future looks quite constructive.
I mean, there is a school of thought in the oil market that you shouldn't really pay that much attention to futures in the sense that it's paper gold. It's driven by financial traders to some extent, whereas what's happening in the physical market can be very different.
Yes, absolutely. And if you look at the physical market, it is telling you that the market is tight. The fact, again, that a refiner is willing to pay a $8 premium or a 70-cent premium to have oil today versus waiting until May indicates tightness, right? They're willing to pay that premium, and refinery margins are still trading north of $20 a barrel. That tells me that demand is quite healthy, right? And we talked before the show, but if I look at where we are today globally, you're at the peak of refinery maintenance. So they're using as little crude as they will over the course of the year. Between February and August, you're going to see demand increase by 3 to 4 million barrels a day seasonally. Now, will we see increased production out of OPEC? We will. Are we going to see 4 million barrels a day? I doubt it. So what does that mean then for your supply demand? You're going to see continued inventory draws. As a investor, right, I'm challenged by the fact that the spot price of oil is not moving higher. That's hurting the energy equities for sure. As a commodity investor, I'm collecting an 8% roll yield, rolling my futures down the curve. Right? So I think the fundamentals of the market are not being reflected in the spot price. Should the price of oil be higher than where it is today? Absolutely.
Can we switch to gold for a sec?
Sure.
Gold in near records and central bank buying, etc. What is lifting gold right now? Geopolitical fears?
Well, no, I think recently, if we look at the last 6 weeks, you've seen a renewed interest in gold from sort of broad retail participation. We've talked before, but for the better part of 2 years, equities are up 15%, 20%. The opportunity cost of holding gold, right, in your PA or in my PA, is I don't own NVIDIA or the Mag 7, which are increasing meaningfully, right? Gold's not paying me a dividend.
That is reversed now, though.
Well, now I'm worried about my asset allocation and my portfolio construction, right? My equities might be overvalued, right? Maybe I should be on the same side as the emerging market central banks who are buying record amounts of gold, again, in a market that is relatively tight. So I think absolutely over the course of the last couple of weeks, it's definitely been the volatility in the equity market and in risk markets generally, and gold is a safe haven, and you're seeing flows there. Longer term, over the course of the last couple of years, and we've talked a lot about this, we've seen a tremendous amount of emerging market central bank buying of gold. And that's only starting. If you look at their FX reserves, they still hold far more paper than developed market central banks do. And we've seen a number of things over the course of the last 16 months that on the margin encourage diversification out of fiat into gold.
Always great hearing from you. Thanks, Hussein.
Thanks for having me.
Hussein Allidina, head of commodities at T.